Yes, hello everybody. So, just quickly about Warren Buffett. If you look at his portfolio, he has pretty much boring stocks in there. And so, it's not very exciting. Wells Fargo, and he owns Bank of America and Exxon and so on. It's pretty old traditional stuff, pretty boring. And there is a formula. It's called beta factor, beta. If the beta is below 1.0, it's pretty boring. So this means the stock doesn't go like the stock market. The volatility is lower. So it's like zero point 0.5. A beta of 0.5 means the stock does not react the full amount the stock market goes up. So there's a study done that these boring stocks with a low beta and that don't go wild like crazy up and down, and that these boring stuff like Procter and Gamble, typically Clorox or some chocolate or food producers, that in the long run over decades that they perform better. The average return. So Buffett was pretty smart when he started to buy those boring stocks, and it's also less risky. You have less risk because they're old-fashioned factories, businesses, and so you have two things. You have a better long-term performance with a Procter and Gamble, and you also have, for example, and you also have you can sleep well. So, but if you buy like stocks that are very volatile, like I don't know, like for example, social media stocks or internet or I don't know, mining, it can go up and down pretty crazy, and even therefore you have more risk. The return is lower. So that's a funny thing, but I've had an interview with a professor from Yale, Roger Ibbotson, and he said in those studies he did, he saw clearly the outperformance of that boring stuff, low beta stocks. He did he did a study over, I think, 4 decades, and he saw that the low beta stocks are outperforming all the others, and he said, but it's now clear, so everyone knows this strategy pays off better, and he said everyone is trying to copy that strategy, like the better beta strategy or Warren Buffett strategy. So he said he's not sure if the outperformance still exists long term because everyone knows about it, and he thinks maybe the opposite can happen, that high beta stocks, like the crazy ones that go up and down like nuts, today can outperform the next couple of decades. But who knows? It's always good to have a nice mix in your portfolio. You should have rock solid stocks, and you should watch the cash flows, and that's pretty smart. You can also have a few riskier stocks. Of course, you can mix it all nicely together, but also there it's very important to have a long-term perspective. Even a riskier stock, I would not quickly sell it. My stocks I keep forever. I don't sell them, even if it's a smaller cap stock. I try to keep them really long term till I retire. And if you look at, most people don't understand the whole thing. A dividend paying stock is a great asset. It pays you constantly dividends, like on a quarterly basis or yearly. And the middle class doesn't understand it, so a lot of people don't have great assets. They have assets they eat cash up, and they cost a lot of money, like a car. They think it's a great asset. It's not. It's consumption, from my point of view. Or a large home for yourself. It's lavish on a large living on a large piece of land just for yourself. It's an asset, of course, but it eats up cash because it costs taxes. It costs maintenance. If you order a brand new kitchen, is it an asset? People would argue, yes, it is an asset, but I would say it gets used up and the value goes quickly down. If you cook there and if you use it within 3-4 years, you lose a lot of that asset. So, and it's not generating cash. But if you rent a home, it's a property, a rental property. If you have that generates cash. I would say that's a great asset, like the stocks. So when you also invest, you should look at the cash flows. Do you receive cash flows, or do you pay out? It flows out. So large home for yourself, where you live, outflow. Renting to some other people, to some renters, income. You generate income. Great dividend stocks. It's a good investment. It's an asset. It's productive. Creates cash flows towards you. And if you look at it, Warren Buffett just got it in his whole life. He was frugal, and he invested in assets that created cash towards him, and that made him super rich. It's a snowball. He created. It's the compounding, and he clearly understood. For example, an asset, gold, yes, it's an asset. Does it generate cash flows steadily? No, it doesn't. So he did not invest in gold. He did not. And you have also costs to put it in a safe or to protect it. And so, whenever you invest for your retirement, think about what is an asset that generates and gives you constantly cash. And that's all for today. So I've talked about beta stocks, that low beta, like boring cleaning, food producers, supermarkets like Wal-Mart, low beta, low risk, outperform the market. They did it for decades. Maybe they still do that. And then the assets I talked about that generate cash towards you. Okay, have a great day. Bye.